What's going on, guys? Welcome to the YouTube channel. My name is Nick Foy, and I've got one goal in 2021, and that's to achieve 10,000 subscribers. So if you could help me out today, just hit that red subscribe button. This is literally the only thing I care about this year. Even though I have rental properties and other businesses, I'm really just trying to focus on growing the YouTube channel this year. So thanks so much for being here, and let's go ahead and dive into today's content I've got for you. And I hope you can find value in it and stick around for future videos. In this video, we're going to talk about the different ways you can make money investing in real estate. So real estate has been one of the things that's helped build my net worth over the years. It's 60% of my portfolio right now. I also have money invested in stocks and Bitcoin and some other assets, but real estate makes up the majority of my net worth because of the values of the properties I own and the fact they've been going up over the last several years, and I've been buying them below their market value. So once I buy them and I fix them up, they become worth more than what I paid for them, and there's profit built into the deals. So let's talk about some of these ways that I'm making money from real estate. So the first way that most people think of is rental income. So rental income is pretty simple. Let's just say we bought a house in a neighborhood and we had it fixed up and ready to move into, but instead of moving into it, we decided to rent the space out to somebody else. So we put this house up on Zillow, put a for rent sign in the front yard, and let people know it is for rent. Let's just say it's a single family home, 3 bedrooms, 2 baths. We're trying to rent it for maybe $1,500 a month. So we're gonna get people contacting us wanting to rent this home. Once we go through the application process, we see all the applications, we screen them to make sure the tenant's a good fit. We get it leased out by writing up a lease agreement, letting them sign the lease agreement, saying, hey, you're gonna pay $1,500 a month. And so we start renting this property out and we start making $1,500 a month. Now let's just say we bought this house and we had a mortgage on it for $700 a month. So now we've got $700 coming out of that $1,500 that we're collecting in rent every month. So we're still collecting $800 going to our bank account. Now coming out of that $800 is going to be our property taxes and insurance if it's not included already in our mortgage payment. But if it was included in our mortgage payment, then that $800 would be, just money coming to our bank account, and we would only be saving that up in case we need to, spend on repairs on the property. So if there's no repairs on the property for the year, then that money is $800 a month times 12 months, so almost $10,000 a year coming into our bank account as income from this rental property. But again, times go by, things break down, we might have to replace the water heater, might have a broken window we got to go fix, different things pop up. I had to replace a sewer pipe in the basement of one of my rental properties recently. It cost me $900. So that almost took away 1 month's worth of rent because I'm getting $1,250 a month from this particular house. So that's one way to make income, though. It ends up paying off over the long run because as you hold this property for 10, 15 years, we collect, rental income every year, and we're getting the benefits of method number 2 for making money in real estate, which is appreciation. So appreciation is basically just the value of the property rising over time. It's like buying any investment. You buy and hold, and over time the investment's value goes up, and someday you hope to sell when the price is higher than what you paid for it. Well, same thing with real estate. We bought this house, maybe 10 years ago when prices were lower. Now prices have been going up over 10 years due to inflation. The cost of building materials have increased, wood's more expensive, roofing materials are more expensive, all the different things in a house got more expensive. So this helped bump the housing price higher, in addition to the fact that people are just willing to spend more money because, there's buyers competing with low inventory, and that's causing housing prices to go higher as they get into these bidding wars. So just by holding on to the real estate, we might make, a decent return on our investment over a longer time frame. So that's another method for making money in real estate investing. Now, how much you make over time just kind of depends on your market, how much it appreciates. Coastal cities over by the water and the ocean tend to appreciate faster. So for example, Los Angeles, 10 years ago, housing prices might have been $400,000, and now, they're $900,000. So they got big price appreciation because it's, a lot of people living in LA. There's millions of people, and there's only so much housing. It's really limited housing in LA, for example, and people want to be in good weather and by the ocean. So there's just this huge demand to live there, and that causes prices to go up faster than, somewhere out in the middle of nowhere, where there's just a bunch of open farmland and there's not a huge demand, for housing out there. So housing supply, housing demand can impact the price appreciation, the value of the house, how much it goes up. So that's one of the things that's kind of unpredictable. You're kind of buying that with icing on the cake. So we're buying maybe for a rental property just to make the rental income, but we're also getting the icing on the cake if the property appreciates and goes up in value while we're holding on to it as a rental property. So with that being said, let's talk about method number 3 that you make money in real estate. This would be the quick flip profits. So if we're fixing up a house and then wanting to resell it within a short time period, like let's just say 6 months, for example. So a fix and flip business, like those HGTV shows where they buy the house, they show you how they renovate the whole thing, and then they put it back on the market for a lot higher price based on the comps in the neighborhood, and then they sell it and they make a lot of money. So that's called fixing and flipping houses, or buying to renovate and resell. So that's another way you can make money. I recently did this with one of our properties. We had bought for $30,000. We put 15 into it, so we were only in it for $45,000. Really cheap neighborhood, really cheap market where I lived at the time. And then we ended up selling it for $120,000. So that's a $70,000 plus profit right there by fixing this house up and reselling it for a profit. So that profit that you resell for, that's another way you can make money, and you can run like a flipping operation where you flip 3, 4, 5 houses a year. You get a little crew going where you got these contractors in your crew, and you just take them from one house to the next and you start to build out this operation. The hard part is getting the financing going, trying to find a way to finance multiple properties at once and cover multiple rehabs at once, because it can get expensive. Then you got to also be careful you don't overspend on each property. So once you can figure out the financing aspect, which we'll talk more about in other videos, then you can go from there and start scaling. Instead of doing 1 flip a year, we'll teach you how to scale and do 2, 3, 4 flips a year and go from there. So there's a lot of people out there running successful flipping operations. And in addition to flipping, let's talk about method number 4, known as wholesaling. This is another sort of flipping method, but instead of actually buying the property, taking possession of it where your name's on the title and you actually do the work and fix it up and resell it, wholesaling is more just finding properties that have fix and flip potential in them, or rental properties that could be fixed up and build equity into them, and then down the road the landlord could sell and make a decent profit. So wholesaling is basically acting kind of like a real estate agent, is how I like to put it. You're looking for property that's undervalued from sellers who are trying to get rid of this thing cheap. Maybe they don't want to do the repairs, maybe they just need to move and get out of town quick. So they're willing to take a discount on the property. So you're buying these properties undervalued, turning around and flipping them to investors who are going to buy them off you. So you're not even going to take possession and do any work. You're just getting the property under contract, then selling your contract to buy this property to another investor. So you're basically turning the contract over, saying, here, pay me a wholesaling fee, maybe $5,000, and I'll put your name down. We'll write an addendum up saying that you are now the one that's going to buy this property from the seller, and I get out of the way for my $5,000 fee. So that's simplifying the process. There's also the double close method with wholesaling. So this would be like actually closing on it with the seller. So you say, hey seller, I'd like to buy your property. You negotiate a price of like $50,000, for example. The home's probably worth $125,000. So there's $75,000 of potential spread there between what you're buying it for and what it could resell for. But you've got to do some work fixing it up first. However, you're doing a wholesaling business, so you're not actually going to do any work and fix it up. So we just buy it from the seller for $50,000. We go to closing, we close on it, and then we turn around a couple hours later or a half hour later, do another closing where now we are the seller and we just sell it to the investor and they're acting as the buyer. And so we go through the whole closing process again with the title company, sign all the paperwork, turn the possession of the property over to the investor. Maybe they bought it off of us for $60,000, so we paid $50,000, we turned around and sold it for $60,000 to them, so we made like a $10,000 wholesale fee there. So that's wholesaling. That's a strategy I don't practice. I just have my real estate license and conduct actual real estate sales, helping bring sellers and buyers together, and I get paid a real estate commission as a realtor. But there are people out there who hustle and do wholesaling instead without having a real estate license, and it's kind of the same thing to me, but I see where they're coming from, that they'd rather just do the wholesaling route. But for me, I prefer to stick to rental properties and fix and flips. These are the long-term wealth strategies because you can hold rental properties and make money multiple ways between the rental income, the price appreciation over time, maybe the profit you built into it by buying it below its market value, like we just talked about with the wholesaling business, and then you get the tax write-offs and tax benefits. So it's a way to kind of just build a little portfolio of rental properties, sit back, collect rental income, and live life. With wholesaling and fixing and flipping houses, you got to constantly be putting in work, taking risks. If you don't flip a house or you don't wholesale, then you're not going to make money. Like once you stop doing wholesaling, you stop making money. So it's like an active business you got to continue running, where rental properties are more passive. You just collect rent every month, and you can hire a property manager to pretty much manage the whole thing for you. You could sit back and literally just enjoy collecting rental income every month and make it more of a passive, lifestyle. So that's why I prefer rental properties first if I can, because of all the different combined methods you're making money into one way. So you don't have to worry about hustling, doing a ton of deals every year like you do with fixing and flipping and with wholesaling. All right, let's talk about another method you can make money investing in real estate, and this doesn't actually involve direct ownership. This more acts as the lender. So let's just pretend you're going to become the bank for a real estate deal. So you've got friends who want to invest in real estate, or maybe you start, a website that says, hey, I give out loans for real estate, and you get real estate investors in your local market that you reach out to and they contact you when they need money. So becoming the bank, helping fund these transactions is another way you can make money investing in real estate, but not directly where you're the owner taking all the risks. Instead, you're getting, the real estate asset backing your loan. So let's just say, for example, you've got $100,000 cash just sitting in a bank account and you don't want it to go to waste where it's losing to inflation and falling behind. So you need to get that money invested. So instead, you lend it out to a real estate investor in your market who does fix and flips. He's got a fix and flip operation, and you say, hey, I'll lend you my money so you can buy fix and flips with it. Since you have, the smarts and the business knowledge of how to run that kind of business, I just want to sit back and collect monthly checks. So, you loan that money out to him, maybe at a 5%, 6% interest rate, and then he makes monthly payments to you like he would to a bank, except, in this case, you're the bank. So collecting interest on your money, and over time you get paid back your money when he sells the property, plus the interest you were earning from lending it out. Now, if you're doing like a fix and flip loan, you could probably charge a higher interest rate, like 8%, 10%, 12%, or you can even ask for a little bit of equity in the deal. So maybe you get, 5% of the profits or 10% of the profits in addition to collecting interest on your loan. So there's different ways you can structure it. But again, it's a little more or less risk way, because if for some reason, the deal goes bad, he can't pay back the loan, then you can foreclose on him and you can take over the property. So now you just got a property and you're going to be able to, sell it and get your money back from it down the road. So that's how banks do it. I mean, they back up loans by collateralizing the real estate. So if for some reason I would stop paying the bank on my rental properties, they could foreclose on me and they could take my rental properties from me, and then they would just turn around and sell them on the market to try to get the money back for their loan that they're out, since I didn't pay them for the loan. So being a lender is a great way to make some money. It's more passive again. It's a way to collect monthly income checks. You don't have the stress and the worry about managing rentals and doing fix and flips. You just are collecting money, from the interest from the real estate investor who's paying you. And then the other method for making money in real estate investing is kind of a non-direct way of making money, but it's through tax write-offs. So when you buy real estate, the government's going to give us different tax write-off incentives. So for example, if we have mortgage on the property, we can write off the mortgage interest. So we're going to get a statement from the bank every year showing how much we paid in interest, and we can give this to our accountant and he can write it off our taxes. If we had property taxes, we can write those off. Any business expenses tied to this property, so even your car mileage, every time you drive to the property, you can deduct your car mileage and your gas and stuff that you're spending to go to these properties. Any meals, if you go out to lunch with investors to talk business about your real estate deals, you can write off different meal expenses. So there's cool different expenses you can write off in addition to the normal expenses of operating the property, repairs, maintenance, property taxes, insurance, mortgage payments, mortgage interest. All those are write-offs that you can deduct against the income you're getting from the property, and that'll help reduce your tax bill so you don't have to pay as much in taxes. The IRS also gives you what's known as a 1031 exchange. So when you go to sell these properties, like if you're running a fix and flip business, you can identify your next property that you want to buy, and you can actually roll your profits from your previous property into that next property and don't have to pay capital gains tax. So this helps you keep more money in your pocket today, so you can keep rolling that money bigger and bigger and bigger and growing it, rather than getting a tax chunk taken out of it each time, which would take away some of your buying power. So the next deal you wouldn't have as much money. You probably can't buy as big of an apartment building if you're trying to roll it from a single family into a duplex, and then try to buy a 4-unit, and then you try to scale up and buy like a 10-unit. So you get slowed down if you had to keep paying taxes each time out of those profits, each time you sell these properties. So 1031 exchange, something I would consider researching more on your own. We are going to cover it in another video, but it's a great strategy where you get, I think, 180 days to actually identify and purchase the next property once you've sold your current property. Now there's like a 45-day period where you actually have to tell the IRS, here's the 3 properties I'm targeting. I'm going to buy one of these, or you could try to split the money up and buy all 3. but you actually have to identify the property. If you buy a different property that's outside of the one that you identified on the paperwork you submitted, then you won't be able to count that towards that 1031. It has to be one of the 3 properties you identified on the paperwork that you fill out on the 1031 exchange form that you're going to submit to a 1031 exchange company. So with that being said, take these notes, take these tips, run with them, see what you guys can do in your real estate investing journey. I hope this video was helpful for you, talking about 5 different ways you can make money. 1, through rental income. 2, through the price appreciation of the property going up in value over time as you hold it. It's always best to just buy and hold as long as it's cash flowing and making you money. And then we've got the fix and flip operation to make quick profits in 3 to 6 months of flipping houses, wholesaling houses, getting them under contract, reselling them to other investors without actually doing any work to collect a wholesale fee. Then we talked about lending out money to investors. So those are the 5 methods. And then the indirect method was, the different tax incentives that you get on your write-offs. And this can actually keep more money in your pocket and kind of be like an income in a way, because you're saving money. You're not having to pay out as much money in taxes. Since you made it to the end of today's video, I want to share with you an amazing resource library I've been putting together. And this is truly going to be one of the best resource libraries out there. Not saying that lightly. I'm putting videos in this library every single month. There's already 50 plus videos in here, and it's going to grow to a couple hundred plus videos. So just hours and hours and hours of content in here, teaching you everything you need to know about real estate investing. So there's real estate lectures. I'll occasionally do some live streams as well, and I'll upload those in here. Got plenty of PDF downloadable resources, worksheets. We're going to have Excel sheets in here, like analyzing real estate deals, so you can use these different Excel sheets. So huge resource library full of training videos. You're going to learn everything you need to know about buying rental properties, flipping houses, financing strategies, where to find these deals, how to market for deals, that sort of thing. But I do have a couple other courses that are mini courses. They're not really mini. They're still full of, tons of videos. So this one, for example, is my rental property investing made simple course. And then I've got these flipping houses made simple. So if you want to learn rental property investing, you can enroll in just the rental property investing course. Again, there's going to be, 30, 40, 50 plus videos, and it's going to grow over time, covering everything you need to know about rental properties. And then same thing with the flipping houses course, just, 30, 40, 50 different videos, hours and hours of content to learn how to flip houses. I've been doing both these strategies for over 7 years now. I own, multiple rental properties. I've had, thousands of dollars in flipping profits, in the 6 figures. So these are tips and experiences, live walkthroughs of houses that I'm, buying and renovating. I show you through one of my most recent flips that I did. So check those courses out, or check out the master course, the Real Estate Investing School. This is going to have, even a larger selection of content to go through, teaching you all kinds of different strategies like Airbnb, land development, new construction, in addition to renting and fixing up houses. So all you got to do is go to asknickfoy.teachable.com. So let's go out here to my homepage just to show you what it looks like, asknickfoy.teachable.com, and I'll link to it below in this YouTube video as well for you. But you can see the 3 different courses there that I've got, and then I've got some other ones you can check out, but these are the 3 main ones right now I've got students enrolling in. So Real Estate Investing School, rental property investing, and flipping houses. So you can check them out. Again, I've got lifetime access memberships for a one-time fee, or you can pay, I think, on the Real Estate Investing School, a monthly subscription, but once you cancel your subscription, you'll lose your access. So I recommend just do the one-time fee, get it over with. It's going to be worth it. You're going to get your money back because you're going to be learning things that's going to help you make a lot of money through real estate investing down the road. So it's worth investing in the education in the meantime. So you can check out current pricing plans. Now they are going to change over time because I'm adding more content. We're growing, we're scaling. So if you notice that the price has gone up, that is why we are going to be, upping the price from time to time. But for right now, you can kind of get the early bird special pricing. So thanks so much for watching. And if you want free content, you don't have to pay for this. You can just watch videos that I make for my YouTube channel. But if you want all these resources in one resource library location to browse through, then I recommend checking out Real Estate Investing School by Nick Foy at asknickfoy.teachable.com.